I was doing a bunch of research on you the last couple of days, and I'm
Uh-huh.
watching all of these old YouTube clips. I'm watching you forecast and hit every major trade over the last couple of decades. I'm watching you in 2006, 2007 on Fox, CNBC, warning about an impending financial crisis, and they're laughing at you. I watched this interview you did on CNBC. I think gold was $1,200, and you're in this like screaming match. They're like, Peter, when are you gonna admit that you're wrong? And you're like, no, 5K, gold's going to 5K, it's fucking going to 5K. They're cutting you. I mean, they're audibly laughing at you, and it's funny to see how it aged. And sort of on the back end of that to start, what is it that you think the crypto crowd specifically has gotten wrong about gold?
Well, I mean, they've gotten a lot wrong about gold, but I think a lot of it has to do with their justification of Bitcoin, because Bitcoin doesn't actually have any intrinsic value. Nobody can do anything with a Bitcoin, right? I mean, you can't make anything out of it. If you have Bitcoin and you can't do anything with it. I mean, you can give it to somebody else, but they can't do anything with it either. They could just give it to somebody else. And so they assume that gold is the same way, that gold is just some kind of worthless rock that doesn't really have any use, and that it has value because we perceive that it has value. And therefore, well, if gold can be worthless and have value, then why can't Bitcoin? But what they miss is that gold does have value. It has a lot of value. That's why gold worked as money, was because it was such a valuable commodity, that it was so highly sought after. But, what made it work as money better than other valuable commodities were the properties that Bitcoin copied, right? So Bitcoin copied gold's fungibility, durability, its divisibility, its portability, and all the things that made gold better money than cattle or, all sorts of commodities that were used. So Bitcoin did a good job of copying all that. But what it doesn't have is the basic value of gold, the precious metal. And without that, nothing else really mattered, right? If gold didn't have any value, the fact that you can divide it wouldn't matter. I mean, you'd be dividing nothing. But because gold is something, it's something very valuable. It is the most useful metal on the periodic table. And the only reason that gold isn't used a lot more frequently is because it's so expensive. And it's very expensive because it's very scarce. But nobody needs Bitcoin in the present, so nobody's going to need it in the future. I mean, it can't be a store of value if it doesn't have any value to store. I understand it has a lot of very interesting properties, but then so do a lot of other cryptos. I mean, you talk about all kinds of tokens. I mean, Bitcoin isn't the only crypto. There's thousands or tens of thousands of these things out there. And, and so they all have very interesting properties about them, but none of them have any real value. And the fact that there's so many of them and there's no limit to how many can be created, I just don't see how there's any even scarcity in these things. But, it's been a big bubble. People that bought Bitcoin and other tokens when I didn't early on, right, when I first learned about it, other people have gotten incredibly wealthy because they got in on this thing early and have been able to cash out. But those gains are going to come at the expense of the people who have been buying in over the last several years, that have enabled the people who got in early to cash out rich. They're going to end up being the bag holders. That's how the dynamic works. The people that get in early and get out make a lot of money, and all of those profits come at the expense of the losses by a much greater population of people who get in late and never get out, or get out with a small fraction of what they put in. And that's what I think is coming, in crypto.
Okay, I think you describe a lot of the positive characteristics of Bitcoin. I think deep down you actually relate with Bitcoin a lot, but I do want to ask you this question, and then I want to get into some of the sort of the doomer thesis stuff. Same question on the contrary is, what do you think you got wrong about Bitcoin in 2017-ish when you were posting that it's going to go to zero and then it's now gotten into where it is?
Yeah, well, I mean, I still think it is eventually going to zero, so I don't think I got that wrong. What I did get wrong was underestimating the gullibility of the public to buy it, or maybe the marketing savvy of those who were promoting it. I mean, I do concede that people that got into Bitcoin and marketed it and promoted it did a great job of selling the story and getting people to buy what they wanted to get rid of, right? That was the key to Bitcoin, is some people got in early. I guess you call them the OGs or the whales, and they had a bunch of Bitcoin and they developed a market out of nothing. They got people to want to buy Bitcoin and bid up the price. so they could sell it. It's just a gigantic pump and dump. And I think a lot of the dumping has been going on over the last several years. And I think particularly after the launch of the Bitcoin ETFs, and then after the election of Donald Trump, and I think, the crypto industry really helped put Trump in office for the specific purpose of pumping up Bitcoin and crypto so they would be able to cash out. And a lot of people have been able to cash out a lot of profits since Trump's been elected. And that's one of the reasons why Bitcoin really isn't going anywhere. Yeah, it had the original run up above 100,000, but since then it's really been going sideways. And if you measure it in terms of gold, it's been going way down. I mean, Bitcoin's off about 30% since its peak priced in gold, priced in real money. And it's still down, but they got up to 126 and now it's like 108, so it's, in a decent correction in dollars, but it's in a pretty big bear market in gold.
So I will say that even since the interviews I watched of yours and, the old days, you were very consistent in pricing things denominated against gold, which I will give you credit for. But okay, look, we spend a lot of time talking about Bitcoin on the stream. We don't spend a lot of time talking about gold on the stream. And that's kind of where I want to focus right now. Can you set the stage for my audience and especially the younger viewers on why gold has had its best performing year to date since I believe 1979, and what exactly is happening right now to fuel that?
Yeah. Well, I mean, first of all, too, if you have an audience that has a lot of crypto, my advice would be to buy some gold and buy some silver. But the reason I think that gold is having its best year since the 1970s is because I think we're going through a period that's similar to the 1970s. Not just that we have stagflation, which we do, but I think we are at the early stages of a major reset of the global monetary order. That's what happened in the 1970s when Nixon took the U.S. off the gold standard, because up until 1971, the dollar was as good as gold. It was not only backed by gold, but redeemable in gold. And so the world's monetary system was really based on gold, even though it was based on the dollar, but the dollar was gold. So instead of, the Bank of France having a bunch of gold, of course it had gold too, but it had dollars, but those dollars counted as gold because you could take your dollars and pick up your gold whenever you wanted. They were like a claim check for gold. And so when we defaulted, that really changed the order, because now foreign central banks had just our paper as a reserve asset. They didn't have our gold. We told them, you can't have the gold. It's ours. You can't have it, right? Yeah. We basically defaulted on our IOU. And so that was a major change. And you saw a major devaluation of the dollar. So the dollar lost about 2/3 of its value against other currencies, but it lost a lot more than that relative to gold, because gold went from $35 in the late 60s to $850 by 1980. But all prices went way up. I mean, oil prices were $3 a barrel. They went to 40. But it wasn't really that oil went up. It was that the dollar went down. We were villainizing the OPEC countries for, jacking up oil prices. But we were the villains because we tried to pay them in paper instead of gold. And they basically said, well, if you're just going to pay paper, well, then we need a lot more of it. If you're not going to pay us gold for our oil, if you're just going to give us a piece of paper, well, we need more, right? Because the dollar wasn't worth as much when it wasn't backed by gold. So it was a big change. And I think what's happening now is the next phase where the world now goes off the dollar standard. They should have went off it in the 70s. They didn't. They kept it. They devalued the dollar, but they kept using it, right? So they didn't, we were down, but we weren't out. But now I think the world has had enough with our budget deficits and our trade deficits and our sanctions and our tariffs and all the things that we're doing. I think the world is, walking away. And what's been happening over the last couple of years is central banks have been quietly divesting of dollars and replacing dollars with gold. And I think what the world is doing is going back to using gold as the primary reserve asset. I mean, not necessarily a gold standard. I don't think, the euro is going to be a convertible currency into gold, but I think currencies, central banks will hold primarily gold, not US dollars, right? And not euros or not pounds. I think gold will be the main asset that central banks hold to maintain the value of their currency. And so this is a major change, mainly for the United States. It's not as big a deal for everybody else, but for the US, it is a huge game changer because it means that we can't can't keep living beyond our means anymore. We can't keep printing money and then using it to buy stuff we didn't produce and borrow what we didn't save. So it means that the cost of living is going to go up dramatically in the US. The cost of borrowing money is going to go up a lot, and asset prices are going to come down, certainly in real terms. What happens in nominal terms, hard to say. But in real terms, priced in gold, we're going to continue to see a major decline in the value of U.S. stocks, of U.S. real estate. And that's been going on, since 1999. The Dow Jones, despite going up fourfold in dollars, is down better than 70% in gold. And those are real dollars. So assets are losing value, but that's going to continue and accelerate as the world really officially moves off the dollar standard back to the gold standard.